Welcome to another episode of Rich Dad Stockcast, the podcast for people that are serious about improving their financial education. I'm your host, Denney, and today we're going to break down one of the most important financial skills you'll ever learn: how to start investing in the stock market, even if you're a complete beginner. Now, most people believe investing is complicated, risky, or only for the wealthy, but the truth is anyone can start building wealth in the stock market with the right knowledge and strategy. And that's why we've got a special guest with me today, Rich Dad expert Andy Tanner. Andy is one of the best stock market educators in the world, and he's going to help us break down the exact steps you need to start investing today. Now, before we dive in, make sure to grab your free investing tools and resources at stockcastbonus.com. If you want to start investing the right way, we've got some powerful tools waiting for you here. Andy, let's get into it. Welcome back to the show.
Del, always a pleasure. I look forward to our conversations each and every week. And another compliment to you. This is a fantastic topic because actually it's never been more important for beginners to become non-beginners and get some experience as investors because of what's coming up. So the timing couldn't be better for this topic.
Quick question: stockcastbonus.com, great resource for beginner investors. That's our topic today. Tell us a little bit more about that before we get started.
Yeah, we very much enjoy the Stockcast, and we think it's a great forum for, as you mentioned, beginners to come and learn a little bit about, the rich dad culture, the rich dad spirit. The mission is about elevating well-being, financial well-being of humanity. And so there's great context shifts to be made. Specifically, the Stockcast bonus is a free resource. So we do that. People say, well, you get what you pay for. How could a free resource be valuable? That's a fair question. The reason we make that free is I love removing excuses, because if a person doesn't have any risk in doing something, they're not allowed to whining. I could get canceled so easy with the stuff I say, but everyone's a victim of something, Del. I've had my health problems, but there's people worse off than me, and there's probably someone worse off than everyone listening here. But there's so much whining that I think, hey, you know what? If you make it free, no one can whine because there's no excuses. That Stockcast bonus is we change it up once in a while. We have different things we give, and right now we're doing a really valuable ebook. And I wrote it at the suggestion of one of my partners, and it was his brainchild. He says, Andy, could you execute this? I said, yeah. And I'll tell you, they throw the word life-changing out a lot. Something's life-changing. Take the challenge. It's free, and just see within just the first few minutes of peruse it if you want. But a person will say, wow, if I do what I'm told in this book, my life will change for sure. So, it takes away the excuses in the world, and it's free, and it will give you absolutely information, 6 specific things, actually. 6 specific things that absolutely move the needle, habits, numbers, things that move the needle and brings people towards their goals and elevates financial well-being, which is why we're here. So that's stockcastbonus.com. So I don't know. I don't have a very good infomercial voice. Go there now, stockcastbonus.com. It's waiting for you. So there's my best commercial voice on that.
There you go. I love it. That sounds good. Thank you for educating us on that. Now, speaking of excuses, let's start with some of the excuses that beginner investors make, some myths, if you will, about the stock market. I'm going to give you some, and I kind of want to see your take on it. I'm sure you hear this a lot. Let's start with this one. Someone might say, I need a lot of money to start investing. Is this true? How can someone get started with just a small amount of money?
Well, I'll change that question a bit because I think it's related. Is I'll often have people say, Andy, what's the ideal amount of money to start with? Which is a very similar question. And I'll say, well, I think a great number would be, maybe $200 or $300 billion, like Buffett. That'd be a great place to start. I think that'd be ideal. But the reality of it is we start where we are. And so, what question you want to ask? You're going to start where you are. The beautiful thing about compounding, which if you really just get beyond the lip service to it and the rhetoric around it, if you really listen to it, it is the most powerful force in the universe. That compound interest grows and explodes. There's no growth factor more than exponential growth. And so you're dealing with something that goes vertical, that approaches the speed of light, that approaches infinity after a while. And so there's three parts to compounding. There's money. Okay, so there's your money part, there's your rate and your time. But of those three, over and over again, people find money is the least important. There was a story, a fable of a king, and this king was going to hire an artisan to carve some stone. He's taking interviews, and one artisan says, "Well, I want, you know, 200, 2,000 pence, or 20,000 pence, or 50,000 pence." And one artisan says, "Well, why don't we just do a month-long project, and you pay me as I go. I'll take one pence first day, two the second, four the third, eight the next day, 16, 32, 64, 128." And after the first week, we're at $1.28, and the king's like, "Man, this is a bargain." But if you continue that, to 256, 512, on and on and on, 1024, 2048, and on, you wind up with $10 million at the end from pennies, from a penny to $10 million in 30 days. So that compounding is the most powerful force in the universe. You combine that with leverage, allows you to move the world. But I would say if you were to ask my sons the ideal rate of return, it would be an infinite rate of return with zero risk. Now that breaks the model, because the model is the more reward you seek, the more risk you have to take, is the model, but not with infinite return investing. Many of my friends, and I've had infinite return projects before, many of my friends invest if that they have no money. And I had written a guide. It's not available on Stockcast Bonus anymore. Maybe it'll come around again. But I had a guide where I gave 8 lessons that I learned as a young man from hanging out with rich people, and it's called how the rich invest with no money. And what you'll find is a great example would be Kenny McElroy. Perfect example, as a matter of fact, is if you stripped him of 100% of his wealth, he had not even one penny, he would be wealthy immediately again. And the reason is his model is built in such a way that it does not require money. Well, that's the beauty of debt. With real estate. In stocks, we do need some money, but we can get close to that zero number. We can get drastically away from high numbers with the options market. And so that leverage and that compounding, that 1-2 punch that brings us closer to zero money in the deal, I think it opens the door for anyone. The catch is this, and this is a legitimate yet temporary excuse, I suppose. Education of this kind is not taught in school. So it would be difficult for me to lay blame on an individual who was told, go to school, get a job by everyone in his life, parents, teachers, adults, go to school, get a job, invest in mutual funds, get a 401k, blah, 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 blah. Their mindset and their context won't even be close for this type of real investing. And real wealth building. So, but once they, come to a channel like this and hear these things, now it is incumbent upon them to learn more and say, wow, maybe there's more than just go to school, get a job, and invest in mutual funds and diversified portfolio and a 401k. Maybe there's more than that. So that's a long-winded question or answer to a question of, do you need a lot of money to start? No, you don't need any money to start learning. And if you have a paper trade account and you do well, money will come out of the woodwork.
Very good. I want to hit one more myth before we get into steps on how to really start in the market. I think there's one that's really important to hit, and you've probably heard this before. I have to be an expert to invest. There's this expertise that comes along with it. You got to be, a Harvard graduate. Why is this a myth? Why do so many people believe that? And what can they do to overcome it?
Well, talking to what is an expert? They call me a rich dad expert. I don't know. I know more about fundamental analysis than the average guy on the street? Probably. Do I understand technical analysis better than the average guy on the street? Probably. But I'll tell you, Dell, I'd rather say I'm a rich dad student than an expert. I've been studying for 30 years. Robert taught me how to study. I now have my own team. I study with them in the same way. We choose a topic and we know how to study and learn what the author said. And so we do study. You can invest as a student in investing. I don't think you have to be an expert of investing. And education's only half the battle. Education is the first step. But once you have the knowledge, the second step is bringing your behavior in line with it. All of us, within the sound of our voices here, all of us have things that we know how to do and we don't do anyway. And investing is very much like that, in that a person might even know the basics of what to do, but they haven't found the habits. So there's a gap between ignorance and knowledge. Education fills the gap. There's also a gap between knowledge and behavior. Habits and discipline and temperament fill that gap. So, a beginner investor, I'd look at two things. I'd say, okay, what knowledge do I need, and what improvements in my temperament, my habits, can I implement? And then you're going to be on your way. So, do you need to be an expert? I don't think so. And even the experts, so-called, they don't perform always as well because they're not true experts. They're brokers, which is why they're broke, I guess. So yeah, I'd say both of those miss. And so, why would you trust me? Why would you trust me? Find out. Let's find out. Can you invest? Let's find out. Let's do some investing. Let's find out if you have to be an expert. Let's find out. I used to love Hoist Gracie, where everyone would talk about fights, and he'd say, well, do you think you could beat so-and-so, or do you think so-and-so could beat you? So let's fight. Let's find out. Let's find out who we're biz. Let's go have the fight. Let's find out. And so, let's find out. So maybe we can come back with break. We can talk about how to start that process.
Well, let's do that. We've just busted some of the biggest myths about investing, but now let's get into the good stuff, how to actually start investing today. Now, when we come back, Andy, I'm going to have him walk us through the exact steps to get started, how to choose an account, how to make good investments, how to make money in the market. And don't forget, if you want free tools to help you invest smarter, go to stockcastbonus.com right now. Grab your resources. We've got everything you need to take action today. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast. I'm your host, Denney, and today we're breaking down exactly how to start investing in the stock market, even if you've never done it before. Now, Andy, let's walk our listeners through this step by step. What's the first thing someone needs to do to start investing in the market?
Well, from an education standpoint, I would read the book Rich Dad, Poor Dad. I would read the cash flow quadrant, play the cash flow game. And the reason I would start there is they are simulations, particularly the cash flow game. It is a simulation. And the best way to learn something is to do it, by far. And right underneath that, the best way is a simulation. So if you want to fly a plane, you could learn by getting up in the air and flying the plane. Maybe you do a simulator first that simulates the real experience. And that's what the cash flow game does. So the reason I recommend those, wholeheartedly every time, is we played it with my kids and I saw it change their context. And there's a certain way of thinking, a context, and I think it's all context. It's never the seed, it's always the ground. That's from biblical. It's a generalized principle. You throw a sower went out to sow seeds, and some fell on the stony ground, and some fell on the weedy ground, got choked out. Some the shallow ground didn't get root, sun chokes it out. Some the birds ate. It's not a problem with the seed. It's not a problem with the stock investing. It's a problem with the investor. And most people want to talk about investments and they want advice, which drives me crazy. I think I can speak. I don't try to speak for Robert often, but I think I can, because I've seen him go crazy when people say, if I have $10,000, tell me what to buy. And it's always about an external thing. What should I buy? Should I buy Bitcoin or gold or whatever, instead of an internal thing? So the first step to becoming is not to do or have, but to become. And say, look, I'm going to become an investor. And that starts with a mindset shift, an improvement. And the best way I've ever seen is not by listening to a lecture, even a podcast like ours. You go buy a cash flow game and you learn by doing the cash flow game, and that would be the first step. After that, now we're going to move to doing the real thing. And people read Rich Dad Poor Dad, and I'll often if I'm asked to speak in a large crowd, I'll say, hey, how many have read Rich Dad Poor Dad? And they've all read, every hand goes up. It's the best-selling book of all time, and all the hands go up, and it says, great. Did you like it? Oh yeah. Life-changing? Oh yeah. Wonderful? Oh yeah. But it really wasn't for them, because I'll say, all right, name the 6 lessons. Name the 6 lessons. And the first lesson is the rich don't work for money. And the 6th lesson is the rich work to learn. In other words, study is important. So if I was a beginner investor, I would not buy a stock to make money. I would buy a stock to learn how to buy a stock. In other words, to say, I'm going to engage in that activity to learn how it works, whether I make money or not, whether I make a mistake or not. So let me tell you about the risk of doing this, if you want to do the real thing. I flew to Denver, Colorado, was a young guy, about 100 pounds ago. And I went with my wife, and my instructor's name was Rhett. I went to my first seminar on how to buy stocks. And the guy gave me some instructions on what to look for. And so I ran a scan. I had a list of stocks. And the Panera Bread Company has gone public twice. It went public, then it got back private, then it went public again. And this is way back in the first time. It was $16 a share when it came up on my search. So I bought 10 shares, $160, which is lint. It's nothing. $160 can't even get you through the checking of Costco anymore. You can't even go on a Costco run for under $200 anymore, right? You just can't. And so, I drop $160. That's a lesson. That's an education. That's a class. I'm going to spend $160 to learn how to do this. And if Panera Bread goes bankrupt, I'm going to lose $160 and I'll learn something. But that's the worst I could possibly do. And people will spend that on a phone bill or a Costco run or fill their gas in their car and their boat, if they do both, whatever. So how does a beginner invest? Go buy 10 shares or 1 share and start learning how it works by doing, and quit worrying about making money on your first trade. I think one of the biggest mistakes these guys make is they worry about making a mistake. You want to be a shareholder? Go buy something, and go buy something that you like. What's wrong with owning Home Depot? What's wrong with owning Costco? What's wrong with owning Nvidia? What's wrong with owning Apple? What's wrong with owning any of these things? Go be an owner of a really cool company, receive a dividend, and then you'll start learning. And if you lose a little money, you'll learn why, right? So I would say hop in, go. I wouldn't put $1 million in my first day, but I would take the pressure off myself as a beginner to say, look, I'm a beginner. So I'm going to buy 10 shares of a $20 stock and risk a couple $100 and get going. And, is that a financial advice? I don't know. Maybe I get in trouble for giving financial advice, but if your position size is low, what do you got to worry about? And you'll learn more. You'll learn more by just getting going. And then you'll know what questions to ask and which questions were irrelevant. You mentioned choosing a brokerage. I've seen people stall on choosing a brokerage as if that mattered.
Well, I actually wanted to bring that up because I know someone out there is like, what do I do when I want to buy a stock? Okay. How do I do it? What would you say to that person?
Let me take a sledgehammer to that. Okay. let's say that my brokerage that I use, and I have several, but let's say my main brokerage that I use, shut down tomorrow. Okay, so what would happen to me? Does my life end? Do I all of a sudden suck at investing? And did the keystone of my success just crumble? It would be no different than if I switched cars. I switched from one brand of car to another. Switched trucks. Oh, instead of doing a Ford, I'm going to do a Chevy this time. They all have four wheels. They have a steering wheel. They have a horn. They have an MP3 player. They have a Bluetooth. They have power windows. They have power brakes. The windshield wiper. They're all the same. It's the vehicle. So being a great driver has nothing to do. You can give me the worst car in the world. I'll pack myself into a Toyota Corolla and I'll get there. Or you can give me a Hummer and I'll get there. The brokerage is simply, how does the brokerage decide what stocks I'm going to buy if I do the investing? So that's a great question. And I've seen people get hung up on stuff like that. What? I got to get the best brokerage. That's like saying I'm going to get the best brand of car. Just pick one. And if you don't like it, pick another one. There's just a boldness that I hope people can appreciate to let's not be such a freaking a scaredy cat society and afraid of so afraid. That's what school does. You better not make a mistake. You better not look, go buy some stock. If you're a beginner, go buy 10 shares. And then, if you have a question after that, then reach out to me. But I as a teacher, I don't know it's like Mr. Miyagi, Danielson, I say you do. No question. Just go do it. And then you'll know what questions to ask, right? But people are so afraid of making a mistake that they realize if I spend a couple $100 to buy my first stocks, I'm probably going to learn more just by being involved and by doing the real thing. So that might not be the best advice for everyone, but it's certainly how I would tell my kids to do it is, what should I do about business? I want to learn how to do a business. I'd be expert. Well, go buy one, go start one, go invent one and start making mistakes. And if a person's afraid of making mistakes, well, I don't know what to tell you. They're the best teacher ever. Everyone will tell you that. Mistakes are the best teacher.
100%. All right. So we're at the point, I'm new to investing. I'm getting educated. I played the cash flow game. I'm seeing patterns. I have my brokerage account. I'm buying 10 stocks. I've failed. I've learned. I'm getting better. Where do I go from there?
Okay, now I can talk to a guy like that because I'm not wasting time with someone who's going to sit on the fence and never get anything done. You've proven the very first thing, which is taking action to change your life, doing something. So once a person gets to that point, I'll say, all right, now we're ready to study. What should you study specifically? Because if a person's not going to act, what does the study do? They'll be in the paralysis analysis forever. Mm. 4 things. You learn the first one, the cash flow game, and it's a fancy jargon that we'll define. It's called fundamental analysis. Let's take apart those 2 words. Okay, let's kind of look at those. What does fundamental mean? Well, it means important stuff. It means necessary stuff. It means foundational stuff. So, I'm a basketball player, so it's dribble, pass, and shoot. If you don't dribble, pass, and shoot, you're no good. You have to have those fundamental skills. If you can't dribble, you're going to travel. If you can't shoot, no one's going to pick you, right? And if you can't pass, no one likes to play with you. So dribble, pass, and shoot are fundamentals. That's key. And the cash flow game, once again, shows you. So the way you look at fundamentals is like a doctor's checkup. There's certain important stuff. I go to the doctor. What's the first thing they do at that dang checkup? They say, Andy, step on this scale. I says, are you freaking serious? They go, yes, we are. I step on the scale. They tell me something called my BMI. They go, Andy, you really serious? Really? I says, hey, it is what it is. I named my kids Ben and Jerry. What can I say? But and then they put a blood pressure cuff on me. I could have a headache, blood pressure cuff, sore throat, blood pressure cuff. I just had, I walk in with my arm cut off and they blood pressure, whatever it is, blood pressure, because it's important. A1C, blood sugar, it's important. EKG, it's important. Hit your knee with the hammer and see if it kicks. It's, I don't know what that is, but it's fundamentally important because they do it. Well, there's just certain metrics that show a healthy body, and there's just certain metrics that show a healthy business, whether it's real estate, stock, franchise, whatever, fundamentals are there. So that's the first thing. How do you read a financial statement? How do you know what you're getting when you pay for it? And if you have strong fundamentals, you now know what you're receiving, what the value is, and you can make a better decision on what price you want to pay. Number 2, speed round. Number 2, technicals. Price action. Prices move based on emotions of market. This happens supply and demand, emotional. We really want this. It's scarce. It's not. Real estate, stocks, gold, silver, Bitcoin, petroleum, oil, everything has a price. Everything has a price. So price movement is technicals. Now that's just information, fundamental and technical information. The third pillar is what I do with that, and that's called positioning for cash flow. Cash flow is the third pillar. How do I put myself in the way of wealth by looking at that information, whether the market goes up, down, or sideways? And then finally, the fourth pillar, and I have a class called the 4 Pillars of Investing, incidentally, is risk management, by far the most important pillar. Risk management is what if that's your plan B. If you're in California, your house starts on fire. Well, I had insurance. I was covered. I had risk management in place. Well, a 401k is more likely to burn down than a house, no matter where you live. And they have no insurance. They have no risk management in place. None. Buffett said diversification is not risk management. It's the answer to ignorance. So that's your 4 pillars to wrap it up: fundamentals, technicals, cash flow, risk management. If you're a beginner, first start buying stuff. Prove that you can do some. Prove that you're not a bump on the log. Prove to me you don't have the paralysis analysis. Prove to me that you can handle a big whopping $200 or $300 risk, right? Well, you think you're going to buy a duplex or $1 million franchise if you can't buy 5 shares of stock, right? So prove that you can do something. And once you've proven that, yeah, I am an action taker, okay, then 4 pillars of investing. That's the best way to start as a beginner, hands down. And why do I know that? I can speak with authority that because we have students in 170 countries that we've helped do that. So we know how to do it all around the world. So great discussion. Don't mean to be too hammered on the beginners, but the reason most people are beginners is because they don't act and they sit and watch. And if they wouldn't be a beginner if they hopped in and got in the game. So there you go.
There we go. What a great podcast. That wraps up today's episode of Rich Dad Stockcast. Investing doesn't have to be complicated or scary. If you start with the right mindset, open your account, invest, take action, like Andy said, you can really build wealth over time. Now, a huge thank you to Andy. Thank you for sharing your expertise with us today. I know we kind of throw that word expertise lightly, but I definitely lean on you for your
studentship. Is that a word? Studentship? I don't know.
It sure can be.
We should invent it.
It is now. It was just now coined on Rich Dad Stockcast. Listeners, if you take nothing else from this episode, just remember this. You don't need to be rich to invest, but if you invest wisely, you can become rich. Take action, learn. Now, before you go, make sure you take action. Go to stockcastbonus.com. These tools will help you to invest smarter and avoid the mistakes that we've covered today. And if you've gotten value from today's episode, do me a favor. Like, subscribe, share this episode with someone that needs to hear it. Thanks for tuning in to Rich Dad Stockcast. I'm Denney, and we'll see you on the next episode. Stay smart, stay invested, and take control of your financial future.
This podcast is a presentation of Rich Dad Media Network.